welcome to the Tearsheet Podcast, where we explore financial services together with an eye on technology, innovation, emerging models, and changing expectations. I'm Tearsheet Editor-in-Chief, Zach Miller. And today we're tackling one of banking's biggest strategic decisions, core system modernization. If you're a banking executive, you know the dilemma. Your decades-old core system is holding you back, but replacing it could cost you tens of hundreds or hundreds of millions of dollars and take years, may even cost your job. Meanwhile, fintechs are launching new products in weeks while you're stuck in months-long approval cycles. Today, I'm joined by two experts who've been in the trenches of this transformation. Ritesh Rihani, Vice President of Enterprise Banking at Galileo, and John Craper, Principal at PwC. Ritesh works with enterprise banking clients navigating these waters, and John helps to guide financial institutions through modernization strategies. We're going to break down the real business case for core modernization, the revenue opportunities, risk calculations, and organizational challenge that determines success or failure. We'll explore incremental versus full-scale approaches, how to align businesses and technology teams, and what it really takes to compete in today's digital-first banking world. And so whether you're making a technical case, evaluating the ROI, or wondering if this is the transformation your bank needs to make, this conversation is for you. So let's get started. Ritesh and John, welcome to the show.
Thanks. Glad to be here.
Thank you, Zach. Pleasure to be here, and pleasure to be here with my partner in crime, John. He and I go back some ways now, so it'll be hopefully a good exchange.
So I'm excited to hear that experience and that relationship come through in this conversation. So we know obviously there's a trade-off between the cost of modernization and the pain it is to be able to do it versus like the need to stay future-proof. Like, how do you help banks effectively balance those two things?
John, you want to go first?
Yeah. It's a good question because a lot of it depends on where at the bank we start with the conversation. Different parts of the bank are focused on different elements of modernization or different drivers for modernization.
And every bank is on a different trajectory as well, right?
Yeah. Right, exactly. And everybody needs something different as a result of the modernization, right? So sort of starts with a holistic ROI mindset. You want near-term wins. We live now in an age where I need instant gratification, I need instant ROI, or else everything else is scrutinized. Mm-hmm. So thinking about the modernization is daunting. It's a big effort, and you mentioned it at the start, but there are some executives say, I'm not going to lose my job over this. And so, you want to start with near-term wins, like reducing mainframe expenses, improving a customer journey, right? Whether that's a small little customer journey for a particular product or just a customer's journey overall through the bank, right? The way we approach banking in a modern bank construct should be really more customer focused. And a lot of the older banks, the way that banks were constructed in the past, you had your checking accounts, you had your savings accounts, and you had your loans or your mortgage, and there really was no intertwining between the two. And so figuring out how best to solve for the blending of that, which is inevitable now for your customers, while also creating kind of high volume, low risk workloads. That's one tactic. The other thing you want to do while you're thinking about the cost of modernization is how do you keep basically a future proof opportunity with a flexible API-based architecture? How do you scale with new technologies? Sure, you're going to spend some money now, but it's to save money later. It's to build agility for later and take a lot of the risk that will inevitably cost money down the road by mitigating now. I don't know, Ritesh, it feels like that's the conversation we have anytime we go to a bank is you don't have to solve everything in one. But everybody wants their piece of the benefit here.
One of the great things about working with a partner like John, PwC, is that by the time I get into a conversation, a lot of this initial groundwork has already been done. A lot of banks, look at the different stakeholders in a bank, right? You've got the business execs, you've got the CFO, you've got the tech people, you've got the operations people, you've got the digital people, all of them looking at the same problem from a different angle, all of them having different problem statements. So by the time we get into the conversation, John's already done the great work of convincing them about why they need to change and how they need to change. Most conversations I end up having are probably I think at a tactical level, where you look at just how do you get the best ROI, how do you launch a sidecar or additional product, or how do you solve a particular problem you might have, which I think works really well. But especially with enterprise banking, it's more fun to look at the strategic
Yeah.
outlook, right? So you're on these mainframe systems, and given how technology has evolved, is how you've been looking at your clients. With mainframe technology, everything siloed into one place. You're looking at it particularly from an account basis, like John said. It's consumer checking is separate, consumer lending is separate, mortgages are separate. All these systems are separate because they're individual silos of technology built into the bank. Now, as we evolve technology into more data-centric, cloud-native, API-first, real-time system, you have the potential of combining all of those things, right? So instead of looking at a client as an account, you can actually look at them as a sum of all the relationships that they have across the
Yeah.
bank. And beyond that, I think one of the biggest problems that we're trying to solve is how do you go even beyond that? I mean, you remember that large wealth management client we had that we were working on a couple of years ago. They're trying to break down the silos even beyond the individual to householding across
Yeah.
their families, across their businesses. And how do you give them a compelling offer that makes sense for them in the space that they live in, not just as an individual or as an account? I think that's what I find most exciting. And that's the kind of conversation I hope will drive people to use modern techniques that actually help you solve the problem rather than keep existing in the legacy mainframe technology that you have, one built for lending, one built for consumer, one built for mortgages, et cetera, et cetera, et cetera. So I don't know. That's how I feel the conversation will progress.
Yeah. It's an imperative,
It's an
right?
impact.
Put yourself in the shoes of a consumer, right? I remember as a kid, right? We used to go. We had I think we had my mom had a few different bank accounts, and they were at a few different banking relationships. As a consumer today, I want everything at my fingertips. I want to make it easy. I want to see everything in one place. If I were a small business too, I can't imagine what it'd be like if I were a small business. It's a whole lot to manage. And if I've got to go from bank to bank to bank, relationship to relationship to relationship to manage that, like it's going to make it really hard and I'm going to be really turned off from that. So for me, as we talk about like what is the ROI opportunity here? What are revenue opportunities? To me, the imperative is as a consumer, if things are not easy for me, I'm not going to go to that bank. I'm not going to spend all of my money and keep all of my money at that bank. I'm going to go somewhere else where I can say, man, thank God that's one less thing that I have to worry about. It's all encapsulated into one place. So like we can talk about the ROI. Yes, the ROI is going to be realized probably more so in the future. The
Mhm.
imperative piece is if I don't do that for right now for the future, I'm gonna lose the clients that I need and that I need to grow for the future because everybody else is thinking the same exact thing.
Shameless plug for our parent company, the fastest growing bank in the country. We just crossed threshold of 10 million customers, and that's because they're doing exactly what you just described. It's a one-stop shop across checking, savings, lending, insurance, all financial products you can think of with the ambition to even add more. And I think that's the journey a lot of banks will need to take. Enterprises are far behind. I think Chase is probably the best example where they've tried to consolidate everything into a singular experience. But I think a lot of the other banks, most of the regional, super regional, are still far behind in that space. So yeah, I think it's showing. The results are showing. I mean, look at all the fintechs globally, whether it be Nubank, Starling, SoFi, they're all offering universal experiences, and they're all some of the fastest growing institutions on the globe right now. And banks have to sit up and take notice and see what's being done differently.
Totally agree. I missed the balloons and the free toasters on my end, but um,
The dumb dumb lollipop.
so
Got
we
it.
talk about the strategy. I'm curious. We're obviously a risk averse industry, and I would love to be able to quantify and qualify if you guys can help us. Like, what's the risk of continuing to run these legacy systems? How bad is it?
My favorite topic. Go on.
Pick your
With a little
poison. Where do you
sugar.
want to start?
Yeah.
I- Like, and again, I go back to who are we talking to? Right? If we're talking to the technology folks that are evaluating it, we talk about the old mainframe based, legacy core banking platforms, everything written in COBOL language, lots of code. I didn't go to college and learn code. I'm not that guy. And so, there's not that many places that are teaching old COBOL language to folks and saying, all right, for your job, you're gonna run a mainframe core banking platform, right? It's near impossible, right? And just even the term fintech, right? People want to work with fintechs, the younger folks now, right? And that's what Galileo is. And so, I think if you're talking to tech people, right, like we're getting lower on the same people that have managed and maintained these platforms for 30, 40 years at a financial institution. Um, and so there's a lot of risk there, just operational risk. We have a bank that we worked with, and they said we've built an entire business units at our bank that were devoted to executing all of these given processes. And we've realized that these business units alone,
Mm-hmm.
everything that they do that's manual is something that can now be done in an automated way within a core banking platform or in a surrounding modern platform ecosystem,
Mm-hmm.
right? And so, just from an operational standpoint, how big has your bank swelled? How much time are your people spending doing manual tasks that could be automated? And those folks could be actually repurposed to
Mm-hmm.
way more productive tasks to manage the business. Go talk to the risk folks, like the compliance people. We work with financial institutions that have had regulatory challenges, that have been hit with consent orders, or that don't have sufficient enough controls to manage their business. And they've got manual processes in order to ensure that they're in compliance with a given reg. When again, you could go and look at the core banking platform or one of its integrations and say, why are you creating risk by, somebody who's been with the bank for 35 years doing the same process? Why not actually have a modern platform that actually does it? And that person knows what good looks like, and their focus is really on approving and validating as opposed to trying to do the work themselves. You go to the business and they say, we really want to offer new dynamic accounts, new dynamic products, and they're still stuck with the same old, savings account with a low to mid interest rate, right? And they can't do anything that's more dynamic. Ritesh mentions the parent company SoFi. You've
Mm-hmm.
got student loans and students that have these burdensome loans that they're going to have for 10 to 20 years. Why not create opportunity for them to kind of mix and match? You've got a loan. Why don't we give you some benefits on all your other financial products? The ability to do that gets constricted with some of these older architectures, and the amount that there was a show on MTV once that involved souping up your car, your old car. That's what the banks are doing, right? They're souping up as much as they can, but at some point, your 1985 Pinto is still a 1985 Pinto.
That's a great example. Yeah, but that's a fact. Most banks are duct taping capability onto what they already have, and eventually it does break. You've seen the number of outages we've had in the industry
Yeah.
recently. That's all happening because they put duct tape upon duct tape, and when something breaks down the road, you don't know how to solve it. I just want to go back to that COBOL example. One of the best sales engineers I've worked with started off in life with one of the large consultancies, working on one of the legacy platforms, learning how to program in COBOL. 6 months later, he just ran for the hills. He says, I'm not doing this. I'm not going to do this. I'm going to move somewhere more modern. And he ended up in a place that I used to work at where it was Java and Python, much more familiar, much more comfortable. Think about the talent drain. You have to maintain a legacy platform with people who know extremely legacy language. The smaller and smaller pool of people, they're literally retiring or dying. And then you have this new wave of talent coming in, which doesn't want to work with you because of all that legacy, and they want to work with something more modern. So that's a huge drain. That's a huge risk. If I look at, you talked about consent orders again. You and I both worked with one of the largest banks in the country and another one which is top 40, consent order after consent order, consent order, and they have no ability to change at the pace required and address this, and therefore they're duct taping over and over again. Worked with another top 5 institution. Their mainframe goes down a few minutes a month. It has to. It's necessary downtime. Real-time payments get affected by that. Clients cannot actually make payments happen at the speed that we're used to now with RTP and FedNow and all the other things happening. So they literally created a very expensive solution around that to have a cache which would just absorb all the data, do all the transaction, and then post it back to the mainframe. All those problems are solved with a real-time system. It is native capability in any modern core, whether it be Galileo's or all the others that we talk about. And yes, it's expensive, but also if you're future-proofing yourself for not the last 50 years, but for the next 50 years, it's a necessary move. It's strategic, not just
Yeah.
that. Yeah.
Zach, what's interesting is these, you have a smaller financial institution, oftentimes those conversations on the incremental benefits for each, call it line of business or support function, you know, most of the time those people are all in the same room having that conversation.
Mhm.
These larger financial institutions, those conversations are segmented. And so, if I want to have a conversation of, business needs with technology, they're busy thinking about their technology, their technology constraints, their mandates, their trimmed budgets. They're not necessarily worrying about who's in the front office, worrying that they can't get their customer a particular product type. And so having, just going back to the concept of like the holistic ROI, it takes somebody or a group of people to think across lines of business, across support function, across all the elements of the bank to say, okay, this there's value in every single one of these areas. Quantify those, right? It's
Mhm.
not just it's to solve for this one need over here. It's multiple needs across the bank.
But I think the challenge, John, I guess you and I have been familiar with this, is the as exciting as this sounds, and I firmly believe in it, which is why I've been doing this for over a decade now. There are very few examples of people who actually executed on this in the appropriate manner. I think most of the exciting examples are coming out of the change being driven by the fintech industry and not by banks being able to adapt. So I think there's a whole new way of thinking that needs to evolve as well. That this
Yeah.
is not a multi-decade transformation project. It has to be more nimble, more agile. It has to be outcome-based, capability-based. And somebody has to have a grand plan, but the execution has to happen in a much more nimble and agile manner
Yeah.
than what I've seen happening in some of the larger banks out there. I don't know what your thoughts are on that.
Well, and it doesn't have to be this massive
Hmm.
this massive undertaking up front, right? Like again, I'll use a shameless a shameless metaphor of Rome wasn't built in a day. You don't need to build an entire bank in a day, right?
Hmm.
That's precisely what a modern construct is designed to enable is build for today, build for tomorrow, and build for the future. You don't need to build everything in one day. Build what you need for now. And then the beauty of a modern construct is that you can switch out. You can integrate new capabilities, new services. You can build new product constructs based on the changing needs of your customers, as opposed to having all of it figured out up front. And I think that's a it's a huge shift. It's a change in the concept with a lot of these banks of, I yes, I want an MVP, but I also need to figure out everything that has to be done. And I really think it has to be done in the next 2 years, or, we may have risks with funding or budget to accomplish this over what could be a 5 to 10 year journey.
I think the mental change that's required is for people and technologists and business owners to realize that the velocity of product launch or capability launch can be much faster than they used to. Speaking to a large tier one bank, they were talking about their development pipes. They wanted 12 development pipes in the SaaS deployment they were going to do for them. I'm like, why do you need that? Oh, because the redundancy is built in and we have these
Yeah.
steps.
Yeah.
When we showed them how you could do that with a couple of pipes and how fast it could be done, they were literally shocked. I think it's a cultural change. People are not used to the
Yeah.
speed at which modern technology can enable change. And I think that's one of the key things that most people don't consider, that the velocity will increase massively if you can get these building blocks into place at the right time. And we haven't even mentioned, the elephant in the room everywhere, which is AI. How do you
AI.
AI if you don't have data centricity and event-driven architecture built into your system? One of the key problems with legacy is that data is siloed as well.
Hmm.
Yep.
All these mainframes hold their data hostage, and some providers even charge for access to the data. Now, imagine a free flowing event driven world where data is just streaming out into a central place. You have huge data sets available to be able to do machine learning, AI, to be able to push out
Yep.
actual recommendations and behavioral changes to your clients. I think that's a big piece missing with banks. And I think that's where some of the nimbler, smaller players are taking huge advantage of technology right now.
Yeah, if I may, Zach,
Please.
Ritesh said it first, so I'm gonna
It's
jump
okay.
on
Well, we
AI.
just, yeah, we just broke the bubble. Yeah.
Perfect. Yeah. So look, AI. the risks that we've talked about, right? Huge change, a lot to unpack, 40 years worth of code on top of code on top of code. How do we figure out to, how to even move from legacy to future? There are capabilities and things that are moving really, 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 really fast in the world today that enable us to move that at a faster pace as well. That doesn't have to be a years long. Find the person that can unpack. Find the any old documentation that may exist that it helps us understand how a particular module is constructed. At PwC, we've been experimenting quite a bit with AI to actually do a lot of this like legacy code unpacking, essentially dissecting old mainframe based platforms to understand and domain drive what that code is, how to unpack it and put it into those buckets so that when you're thinking about how to modernize, you already know where all the code is. You already know what the data was that was feeding that mainframe, and you can map it to, your newer platform. Like that in and of itself would have been months, if not years, especially for these very, very antiquated or long standing platforms. We're doing this in a matter of days, right? And then prompting, just we're working on a prompting basis, almost managing by exception with AI, the AI output versus like actually having to deconstruct, find COBOL users. We can extract the COBOL. We can use AI to translate that into more modern language, JSON language and the like, and actually work faster to move to a modernization play that previously was rife with risk.
John, as you're saying that, I had this image of you and your team like with a scalpel, like performing code surgery and transplantation. So I want to double click on
Yeah.
this. So the technology, the planning can be more modular, and the cycle times are way faster than in the past. But we still come back to that same problem of silos, and we also come
Hmm.
back to the problem of different incentives within management, right? So I'm wondering if you guys could at least give us some best practices about what you tell your clients. What makes for a successful beginning of a transformation process. How do you align the organization around these things? Point us somewhere to show us what companies can do, even if we don't have great examples so far of like a full end-to-end full transformation yet.
Yeah, that's a good question. We spend an inordinate amount of time with our clients on what is a shared vision for the future, right?
Hmm.
Even before we end up dragging Ritesh into these conversations, we will have spent months and months with a bank or a financial institution or a de novo or a fintech looking to disrupt to say, what is again what are your overall strengths, what are your goals, right? What is it you're looking to do? If it's a target specific market, how do we help you identify those areas that are most beneficial for you to plan, right? You don't want to try to build something for everybody. Like time allows you to scale there. Identify what that niche in the market that you're trying to either displace or to build net new. um, the challenge is differentiated products, right? Everybody's got needs to think about what is a differentiated product that I in the market, can sell that nobody else has. And so if you unlock that piece, the conversation of, hey, this is a win for everybody, that makes that conversation is a lot easier. But it does take time for everybody to, and I say this metaphorically, for everybody to get into the room and say,
Hmm.
I'm all ears. Help me understand why this is different. Help me understand why this is better for me, and what's in
I
it for
think I think
me.
what you're saying is also
I-
that there's organizational change that has to happen
yeah,
alongside of the technological change.
absolutely.
Yeah.
Yeah, and we've gone to, Ritesh and I were talking about some other conferences yesterday, the day before. There are conferences that we go to now that traditionally were the original generation, the folks that started the bank and or a credit union or a small community bank and made it the success that it is. And they're now saying, "Hey, I'm ceding control of this to a transformation officer." 15 years ago, was there? I don't think there were chief transformation officers at banks. We now have chief transformation officers that drive future of the banks, and a lot of them are very young, want to make, want to create a disruption, want to do something that's provocative in the market, and are unlocking capital to do so. It's an easier conversation now, but it is a shift because that's still a sort of a changing guard. There's still people that say, well, this is worked for us as our bread and butter, or hey, we pride ourselves on being customer service focused, really white glove. We want to know our customers. And there's a worry that somehow this replaces that, or this takes away some of that personalized service that traditionally people were used to in a branch, or even call center, right? Like just that digital first approach. There's some concern with a bank that a digital first approach takes away what they have as one of their guiding principles or their strategy for the bank, as opposed to the concept of no, this can actually enhance it. This can make it better. And there are technologies and capabilities out there to enable an even closer relationship with your customers. And those are, it's those types of kind of qualitative drivers that need to hit as hard as the quantitative drivers.
Yeah. No, that's a great point. I just want to go back and pick on something you said earlier about product differentiation. Now, one of the problems with a very regulated market is that there's not that much innovation because everything is corralled by regulation, right? But I'll take two examples, which actually I think have been fairly innovative in the market. One's obviously buy now, pay later, or pay in full and pay in three, whatever you want to call it, which I think has led to a huge amount of move away from unsecured lending into just these smaller ways of doing things and buying things. What I found fascinating is how from product differentiation, we've gone to client journey differentiation, where I find now when I use my Amex card, the buy now, pay later is embedded in my journey. I look at my statement, there's something which is above a certain amount. I click on it, it offers me, do you want to put this into a pay in for? Stuff like that didn't happen earlier, and that's driving loyalty. I'm now using my Amex more and more because they offered it first, others are coming later, but I'm obviously not using them. The other thing being sub-accounting. I mean, Greenlight's a great example of being able to provide generational banking for parents and teens, parents and child accounts, which allows you, I mean, look at the capabilities here. You're able to geofence, amount fence, fence where they actually spend or not spend the money. And stuff like this was not possible earlier. And all this is coming up because of technology that's available. We are investigating a use case where you can make that happen for aged parents and parents. So in entire family banking, restrict and overview what your agent parent, who might not be as capable anymore, how they're spending, restrict and overview what your children are spending on, where they're spending on, incentivize behavior. And that's what a modern technology can drive, which I believe that legacy technology is stifling larger banks from being able to do. So the other thing I've seen is that these initiatives, the successful ones that I've seen, have been led from the top at the C level. It doesn't start from the bottom. Every initiative I've seen fail started somewhere VP level or above. Every initiative I've seen succeed started with the CEO and the CIO. So we need buy-in at the highest level to make these things happen. And we need to have the capability and the journey innovation happening in the life of the consumer to get people excited about these things more and more.
Rajesh, I hope you're not. I hope your parents aren't listening to this, because I'm
already doing it for them.
You just said they were not capable to manage their finances. I'm pretty sure. So
I will. So guys, as we're getting to the end of our conversation, so we've talked about the need to modernize. We talked about some of the challenges of doing that. We talked about how to overcome some of those hurdles. I'm wondering if we could end the conversation with you guys just kind of setting the table as what's on the other side. Like what does this unlock? What does banking look like when an institution has gotten to this point?
I have, and again, somebody we know in common, John, one of the fintech founders that I've worked with in my past, he described to me a scenario. It may not be regulatory compliant, but he said, Pritesh, imagine a situation where I'm sitting in a restaurant, I swipe my card to pay my bill, and that sends an event to my bank, which then triggers something in my Tesla and gets started and heated up to the right temperature by the time I come out and walk into my car. that's the kind of scenarios we can't even imagine right now that can be enabled by something which is real time, something that is API enabled, something that is event driven, something that is data centric, and that works across a number of systems. I think one of the things that we're not realizing is the power of the ecosystem that will develop.
Yeah.
Because we have all these technologies allowing each other to talk to each other, not just in financial services, but even beyond. I think that's the getting very, very excited about. Being able to transact across where I am, what I'm doing, my payment type, my account type, it's just unimaginable. I'm getting very excited about that. John, I don't know what
It's
you're
like a
saying.
whole,
Yeah,
it's like a whole new level of embedded finance. It's like embedded in
Yeah.
your life. It's not embedded in a
Right.
product. It's like across everything. Yeah, wow.
We are living in a material world, and I'm a material girl. I want things fast, right? And so, in a modern construct, I want to be able to go to a bank, go to my bank, right, and feel like my bank has always my best interest at heart, as opposed to my bank saying, yeah, this is the only product we have, right?
Mhm.
Or this is the product we have. Maybe we can do a little bit of something to it, as opposed to we don't have that product. Give us a couple weeks and we'll come back to you, or give us a couple days and we'll come back to you and we'll build something that works for John, right? Like it should be my life partner. It shouldn't be a place where I'm just housing my money, right? And in a real time environment, I want that speed, right? I want that speed. I have it everywhere else in my life. Why shouldn't our financial institutions be able to also provide us that speed? And they're on that journey. But on the other side of this, I mean, there's no telling. Look at the growth of the last 5 to 7 years, right? 7 years ago, 5 years ago, we weren't talking about crypto like we are now. Like,
No.
what if 90% of what I'm doing in 5 years from now is centered around crypto because, 15 years ago it was a high yield online savings account, and everybody was putting their money there. What if the next one is crypto? What if there's a new product out in 5 to 7 years that like the bank has said, hey, you know what, we're maxed out. We can't integrate that, so you'll have to go to a different bank now. No bank wants to have to say that to their customers. You're going to lose customers. So this gives you the opportunity to say, hey, we're built for no matter what's coming along in the next 25 years, and we're poised to grow and to integrate and give John and Zach and Ritesh what they want as consumers at real time lightning pace.
This has been a great conversation, Ritesh. John, thanks for joining us on the Tearsheet podcast today.
Yeah, enjoyed it.
That was fun. Thank you, Zach. Thanks, John.